Maybe your car's on its last leg, or you don't have one and you're ready to buy your first. Did you know that your credit score is entirely dependent on getting the best financing deal out there? If you're buying a car in the next year or less, here are the top mistakes to avoid ruining your credit when buying a car. Number 1, don't max out your cards or use too much credit. Spending money on your credit card and not paying off the full amount at the end of the month means that your credit score will drop, which also means that you'll end up with a higher interest rate and consequently a higher monthly payment on that car purchase. The general rule of thumb is don't spend more than 10% of your credit limit, which means if you have a credit limit of $1,000, you don't want to spend more than $100 at any given time. And make sure that every single month you pay off that $100 in full. Number 2, avoid opening new credit lines before you buy a car. Not only does opening a new credit line increase your average credit history, but it also requires a hard pull, which means that somebody looks at your credit and does a hard pull, and that negatively impacts your credit score as well. Number 3, don't be a cosigner for anybody on anything at all. In fact, 75% of all co-signed loans in default are ultimately repaid by the co-signer, which means that if the person who's the main person on the loan stops paying, the co-signer, which could be you, but shouldn't be, is ultimately responsible for making that payment. What? Yeah, you don't want to be stuck paying on somebody else's loan. Aside from being responsible for the payments, your credit score can also take a massive hit if your family or friend decides to default on their loan. Number 4, don't close your accounts. Can you hear me? Don't close your accounts. Any of them. Closing all your lines of credit sounds like a great idea, right? You can't mess it up if you don't have it, and if you close it, all the debt goes away, and then your credit score will increase. Wrong. That's not how it works. Closing a line of credit actually drops your credit score because it has 2 factors. 1, it increases your overall utilization, and 2, it decreases the credit score history. So if you close a card that you've had for 4 years, your credit history, if your newest card is only a year, is gonna look much worse to any lenders. Instead of canceling your accounts, just cut up the cards or put them away and don't use them. But make sure you use them within about a year, because sometimes lenders will close it automatically. Creditors will just close it if you don't use it. So use it for like a $10 payment, pay for your Netflix, pay for a tank of gas, something like that about once a year to avoid closing it, but don't actually close the accounts. So in case you fell asleep, I'll sum it up for you. Number 1, don't max out your credit cards or use too much credit. Number 2, avoid opening new credit lines. Number 3, don't become a co-signer for anybody. And number 4, don't close your accounts. So that's a whole lot about what you shouldn't do over the next few months if you want to buy a car. So you might be asking yourself, okay, what should I do? Great question, and one we'll be answering in the next video. So if you liked this one, make sure you hit that thumbs up button and subscribe so you don't miss the next one. Until then,